Welcome to Oxen Group webinars. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group. We're a financial analysis and investment ideas firm. We're located online at www.theoxengroup.com. Please check us out today on our website. In today's webinar, we're going to be talking about our recent launch of Chinese Internet Equity Analytics. Basically, Equity Analytics are a service that we've created. It's a research service that will allow users to access price targets, buy, sell, and hold ratings, as well as buy and sell ranges on stocks. And also, we've taken each company within its industry and compared them with 5 scores: value, profitability, growth, financial health, and management. And so with these 5 scores, you're able to see where some companies have strengths, where they have weaknesses, and allows you to gauge each company on what are they doing well, what are they not doing well, and how that might affect what you would want to use for investing. Each equity analytics report we put out, we've done now 3. This is the 3rd one. We've also done one on the solar industry as well as apparel manufacturing. And each of these equity analytics reports is a 24-page report, and it's completely completely free for our premium members as well as our long-term investing members. And you can also check it out by getting a free trial on our website, and that will give you access to the report as well. So we did 12 companies: Chengdu, Perfect World, Sohu, Baidu, NetEase, Youku, Dang, Sina, Giant Interactive, Shanda Games, Shanda Interactive, and Kongzong Core. And out of those 12, we came up with 3 buys that we like, that were well outside their price target, and look like pretty good buys right now. Those were Chengdu, Perfect World, and Sohu. For holds, we thought Baidu, NetEase, China Dang, Giant Interactive Shanda Games, Shanda Interactive, and Kongzong were holds, and then we looked at Youku and Sina as holds. As sells. For Chengdu, I'm going to go through and I'm going to preview 6 of the companies for you, and you can. If you check out the report, you can get the other 6 companies and a lot more information than I'm going to provide here. But this is just a quick snapshot to sort of help you understand, what are we looking at, why do we like these companies, etc. So I think one of the best companies out there right now is Chengdu. This is an online gaming company. They operate the Tianlanbu. Sorry, I'm not a Chinese speaker, but Tianlanbu internet game, and it's a really popular game. It goes by the acronym of TLBB, and that's a very popular game in China, and has really allowed this company to be as successful as they are. And what Chengdu has done is they've leveraged this opportunity really well to be able to make a couple other games. And they have 2 huge releases coming out this year that have really shown really great results in beta testing, as well as they've continued to outperform what the market expects. We think the stock could go to about 53.50 within the next 12 months. We think this is a company that, when you look at the gaming companies, there's a lot of Chinese internet gaming companies, and you have to understand the Chinese market is definitely different than the American market. MMORPGs are the kind of video games that the Chinese population likes to play, and these are your role-playing games that are massive online games. And so they're very popular. They're even more popular than video games are here in America. They're more like movies, almost, like you could say, the movie industry. And so there's a lot of companies that make a lot of money doing this, and one of these companies, we think the best financially healthy one, is Chengdu. And if you go through our report, you'll notice that they have high ratings in value, in profitability, in financial health, in management, and in growth. At all categories, they're in the top 3 in all 5. And they've just done a really great job of keeping free cash flow up, limiting debt, and growing at an outstanding rate. One of the key indicators we like to look at when we see a company that we're really high on is growing. First of all, growing revenue at a much higher rate than they're growing sales, general, and administrative expenses. So basically, paying out their employees, paying out their board members, etc. And then also, we like to see net income per employee growing at a much faster rate over time. And Chengdu does great on both of those. This is definitely a company that we think throughout the year is going to do very well with their 2 releases coming out this year that are very high-end releases that will continue to add a lot of revenue to this company, and their game TLBB continues to be a cash cow for them. Another company we really like is Perfect World. We have another buy rating on them and price target of $35. Perfect World is a lot like Chengyu. They operate an online game. Their most popular game is called Perfect World. But this company is about to also release another huge release this year as well. We think that they are, very well positioned like Chengyu. They've done a great job. Unlike many of the other gaming companies, a lot of the other gaming companies have struggled in the last year to remain profitable or to keep the same kind of margins. Have added debt and are kind of failing on some of the indicators that we like to look at. And Perfect World has maintained a really high-end financial health, and that's really good to see from them. And finally, we really like Sohu. Outside of the gaming industry, Sohu is our favorite other kind of Chinese internet company. And Sohu is a kind of an internet portable, sort of similar to maybe a Yahoo, but definitely not in the same kind of investment as Yahoo. The reason we really like Sohu is they've done a great job of integrating a lot of interesting different types of links throughout their website. They have a really vibrant video section. They have the news section. They have an entertainment and interactive section. And this is a company that you look at the two other main internet portals in Sina and Baidu, and they operate at 50 to 100 PE ratios, whereas Sohu operates at just below a 20 PE ratio. It's probably the best value play in the sector, and also it's very low risk. They continue to grow at a great rate. There's not a lot of risk of them losing out on that, and you gotta like that in the next 5 years that the Chinese internet is supposed to double in size, and that literally only right now maybe a third of the country has access to the internet regularly. Additionally. Mobile phones. Those are going to be more people are going to have more mobile phones before access to the internet, and those mobile phones are quickly becoming smartphones. And so you're going to have more time on these sites spent, and you just have to really like that sort of dynamic where you have a lot of people coming onto the internet and you got a great stock that's really undervalued when you compare it to its closest competitors. And it's not like Sohu's not performing as well. It's actually grown at a better rate than Sina has, and this company has better financial health than Sina and Baidu. Although we have a hold rating on Baidu, a price target at 160, this is probably, if you want to get into the Chinese internet, the safest place to be. I think this is a stock with some upside, obviously, to about 160. I think the upside is limited to there, and I don't think that the stock can go much past that until they bring on something new. So Baidu is the Google of China, and they have their search engine is their entire business. Their ability to make money off their advertisements and paid search is what their bread and butter. But this is a company that is very kind of one single track right now, and they've talked about some expansion, maybe to Japan, maybe to Korea, which could add some revenue. But in reality, I think Baidu needs to kind of break out of what they're doing right now to really build up this price past 160 in the way that Google did when they entered the phone market and they entered some of the other markets that they've entered. I think that you need Baidu to sort of do the same sort of thing. And I mean, we're looking at them tripling their operating income in the next 5 years, going to close to $2.4 billion in operating income, and that's in U.S. dollars in the next 5 years. I mean, that's going to be huge growth for them. And even with that, I think that their price target is still 160. And the other thing that could really help their price target is maybe a share buyback program. They got a lot of free cash on hand, and they have about 360 million shares. So you want to see maybe that they could maybe reduce that level, which would then allow for those price targets to really blossom at a much faster rate when you have valuations being divided between less numbers of shares. Sina, this is actually our top sell rating. We think that Sina is a vastly overvalued company. They have shown some really weakness as of late, and I think that they're kind of moving to the third most popular internet portal. One of the things that the knock on Sina is that they kind of have an outdated software. They were one of the very first companies to sort of enter the Chinese internet market, to be out there as a Chinese internet portal, and they haven't developed at the same kind of rate that maybe a Sohu has. Additionally, you've got they actually in the last year actually have negative profit. They've taken a lot of charges against them as of late, some bad deals that they've done, and they really haven't shown that they're going to be able to continue to develop at the same kind of rate that a Sina and a Baidu have. I'm sorry, excuse me, a Sohu and a Baidu. I think that Sina is a vastly overvalued company. Their forward PE ratio is sitting at plus 50. I mean, this is a company that I think is going to come down to earth here very soon, and we like them as a pullback. We definitely would not be a buyer of this company. If you're holding it, I think it's a good time to sell. That's going to wrap it up for us today. Those are just a few previews of some of the companies we like in the Chinese internet sector. You can visit www.theoxengroup.com. Check out our, if you're a member, check out our article right away to see the rest of the companies, what we like, what we dislike about them, some of the price targets, and maybe see some how your holdings are doing or some new holdings that you might be willing to add. If you're not a member, please join us on a free trial, and you can see this whole entire article for free. Or if you have any questions, email us at contact@theoxengroup.com. Call us at 1-800-709-1160.